The stock markets have been doing really well lately, especially over the last month. I'm going to show you this in some charts, and also when you take a wider view, what happens. It changes the story a bit. We're going to talk about all of this and a little bit of recency bias in this video. As well, I need to talk to you about things other than the obvious ones which are affected by war. I'm talking about the obvious ones being gold and oil, but there's a lot of other ways that wars break out and manifest, things they affect differently. And you're going to be shocked when I show you a list of all the countries right now that have a conflict that's taking over 10,000 casualties a year.
At Peter Leeds, we're all about getting you profits quickly and easily. Please subscribe for more premium investor enlightenment.
A special welcome to all the newest members of the Peter Leeds Army. Things are picking up. You guys are awesome, and that's what inspired this very video. If you enjoy the video, you've got somebody who's a member of the Peter Leeds Army to thank for it. It starts at 10 cents a day, $3 a month. You guys show your support. I get your name right across my inbox and my email every time. Just before we get into the wars and the effects that global conflicts have on things other than gold and oil, I want to talk to you about the stock markets. You know that they've done well over the last year, especially over the last month. Does that mean we're having a blow off top? I don't think so, but it's something to be considered at least. But when you take a wider view, you're asking yourself, are we looking at strength in the recent trading over the last year? Or is this a recovery from 2 years ago, 3 years ago? Are we just getting back some of what we already lost? Or is this a new kind of strength that's going to keep on going a lot higher? I'll let you be the judge when you look at these charts. We're going to get into the Russell 2000, the S&P 500, the Dow Jones Industrial Average. But however you look at it, from my perspective, for my part, I just don't trust this market at all. There are gems. You can't find really good stocks. All the stocks we talk about in the Peter Leeds newsletter, I expect to do really great things. The price to go up a lot higher. But overall, I do not trust this market at all. I think it's going to set people up to get wiped out. It's just my opinion. I'm wrong all the time. Do what you're going to do. I'm saying be more cautious than greedy if you can help it right now. Starting with the Dow Jones Industrial Average, this is a 3-month chart, and that looks like it's pretty bullish there. So you think, well, the economy is doing well, things are back on track. This is what I want to show you. If you take a wider look, let's go to a 2-year chart. And really, when you do that, you realize that we're almost back where we started, but not quite. With all this recent strength in the stock market, especially over the last month, but even over the last year, people are going to be vulnerable to investor emotions that can really wipe you out and destroy your investment position. Recency bias makes you believe that whatever has happened the time before that is going to keep on happening. And then people make wide assumptions. They take reaches for things that turn out to be wrong. They put themselves out in front of the train and the train hits them. Of all the emotions which could really affect you negatively as an investor, I identify recency bias as the official widowmaker. Besides that, there's plenty of others. There's fear, greed, desperation, regret, anxiety, embarrassment, stress. That's the big one. I want to tell you some of the things that get affected by global conflict and wars other than gold and oil. And if you ask people, where are all the big conflicts in the world, they're going to mention Ukraine, they're going to mention Israel, but usually the third one is hit or miss. Who knows what they're going to say, and they might not know a fourth one. Most people don't know a fourth one at all. Here's a 3-year chart of the Russell 2000. This almost feels like a consolidation range where it's building up strength at this level and then potentially could break out much higher to the upside. But if you look at a 2-year chart, it's actually quite weak. So just before I get into showing you all of the major significant conflicts in the world right now, where more than 10,000 people died in 2022, and where they're on pace to have more than 10,000 people die again this year, before I show you all of that, I'll tell you a little bit of the latest of what's going on with Israel, because a lot of what happens is that wars start one way like an ember and then they expand. Now, Israeli forces have been hurt in northern Israel from drones fired from Hezbollah in Lebanon. There's a lot of tension between Hezbollah and Israel right now, and I don't see this not expanding. I've been saying this since months ago, actually. And some more of the latest is that Yemen has targeted and hit 3 different international merchant ships that are going through the Red Sea. And now they're threatening to keep attacking ships in the Red Sea. I told you there's always these people who are wanting a response from America, wanting a response from Israel, and they're just going to keep on doing what they're doing. They're trying to instigate a fight more than anything. That's why this will keep on spiraling more out of control, deeper and deeper into chaotic territory. But you will be shocked when you see this list of major international global conflicts right now where more than 10,000 people are dying per year. And what happens is that a lot of the times the risk premium and the supply concerns and the supply constraints factor into the price of gold and also the price of oil. If it's harder to get oil, prices go up, especially if it affects a country which is a big exporter of oil, or it affects a country that has the ability to shut down a strait, like in the Red Sea or the Strait of Hormuz, for example. But here's a 2-year chart of the S&P 500. So we're down a little bit from 2 years ago. So if you look at it a short-term time frame, yeah, it looks like the market's doing really well. And it is in the short-term time frame. However, in a longer-term time frame, the market itself is not actually breaking out to any meaningful degree yet. I'm not saying it's not going to be able to do that. I'm saying consider some caution, because a lot of people think that the markets are so hot right now when they're just possibly recovering from what's already been lost. This is from Wikipedia. Major wars with 10,000 or more combat-related deaths in the current or past year. Here's how many fatalities they had in the last year. And you'll notice a lot of these conflicts started a long time ago, such as Israeli-Palestine conflict, when the State of Israel was formed 3 years after the end of World War II. And there's always a lot of war going on in Africa still. You'll see the Russian-Ukrainian war. The casualties this year, 29,000 to 95,000 plus. They don't even know. Quite a lot of rubble, quite a lot of missing people. And less than 10,000 combat-related deaths. Keeps on going on. But some of the other ways that these global conflicts will affect things, they'll affect specific companies, of course, is that they might take out a lot of the workforce. Or a country's productive capacity declines because of a bridge gets taken down, or there's conflict on their borders. Trade routes shift. Diamond mines, you don't get a lot of diamonds out of a mine. There's not a lot of diamond mines everywhere, but where there are countries where there is a really unique resource like diamonds or lithium, and they go to war, that's going to affect the global supplies of that particular commodity or element. A lot of lithium comes out of very few mines globally, a lot of uranium, especially now with the big push towards nuclear energy, which is a matter of time. And I've been saying this from day one, that the world needs to go fully nuclear. It just makes so much more logical sense. And nuclear power plants now are not your grandfather's nuclear power plant. They're a lot different, they're a lot more efficient, they're a lot safer. But the point of this video is to look at the wider term time frame. So here's a 2-year chart of the NASDAQ, which is actually down from 2 years ago. This may be a recovery from what was lost. If you got in here at this level, then yeah, you're sitting pretty, you're doing great. But a lot of people were already involved in this index before it came down, and now it's getting back to where it used to be, but not quite. Even something like platinum, which, by the way, is about 20 times more rare than gold, and is 6 times denser than diamonds. If you took all the platinum in the world and melted it down and put it in an Olympic-sized swimming pool, it would go up to your ankles. And if it's liquid, it's probably molten hot, so you're just melting and dying right there immediately. And if you put all the gold in the world, there'd be 3 full Olympic swimming pools, but that's it. Platinum is only up to your ankles. And platinum, in fact, has more industrial uses than gold does. A lot of this is from Johnson Matthey, who's got a blog on the unique facts about platinum. But take all this into account and think that the price of platinum right now is $923. So it's less than half the price of gold, even though it's 20 times more rare, used in more things, and has great resistance to corrosion and chemical attacks. But going back to war and the effects it also has effects on tourism and also on the travel industry of a country. And a lot of these countries that are in conflict, a lot of these countries at war, only have a few industries, one of which may be tourism. As soon as the war breaks out, that puts all of their economy at risk. And to answer one of your comments from beneath one of the YouTube videos, we are going to be getting back into, and in fact we're already back into, lower price stocks, $1 stocks, $2 stocks. We're looking at the real good companies that are going to really make a difference for you financially on a small amount to invest. That's our bread and butter. That's what we're focusing on. A lot of the companies that we're looking at right now are trading for a couple bucks each. Here's the thing. When you're looking at a smaller stock, the amount of analysis and the time you put into it multiplies. It's massive. A smaller company is going to require a lot more analysis time and a lot more resources. You always have to do the full Leeds analysis review. That takes a lot of time. We look at every aspect of it with every company. And each company is not always perfect, but we try and find the ones that have the greatest potential to turn a small amount of money invested by you into a small fortune that's going to make a difference in your life. That's what the Peter Leeds newsletter is about.